Healthcare REITs, Welltower versus MPW, Medical Properties and Trust. Welltower and Medical Properties are two major healthcare REITs with different strategies. Welltower focuses on senior housing and outpatient facilities for growth, while Medical Properties emphasizes net lease hospitals for stable income. Both use capital recycling and benefit from healthcare demand. Glad it's out. Good morning, y'all. This article came out last week, 3 days ago, so that means it probably wasn't resolved through the weekend. December 26th at 11:50 a.m. 5 minute reading. According to Yahoo Finance, Well and MPW are two key players operating in the healthcare real estate investment trust REIT industry that are similar in mission but structurally distinct in how they execute and scale. Both companies follow disciplined capital recycling strategies and benefit from the strong demand in the healthcare sector. Yet their approaches differ. Welltower leans heavily on senior housing and outpatient medical facilities, while medical properties focus on net lease hospital facilities. With healthcare REITs increasingly shaped by aging population and healthcare expenditures, choosing between these two REITs is ultimately choosing between growth and stable income. Let's dive deep and closely compare the fundamentals of two stocks to determine which one is a better investment now. For Welltower, Welltower is a leading healthcare REIT that is focused on senior housing, outpatient medical, and post-acute care properties across the United States, the UK, and Canada. With 2,000 plus seniors and wellness housing communities, the company aims to bridging housing, healthcare, and hospitality, creating a vibrant environment where older adults and mature renters can thrive. With the supply-demand imbalance, the company's housing seniors operating show or seniors housing operating portfolio is expected to experience sustained occupancy growth in 2025. In the coming years, with this, the company's show portfolio remains well prepared for a compelling multi-year revenue growth. Moreover, there has been a favorable trend in outpatient visits compared with inpatient admissions. Banking on this, the company is optimizing its growth outpatient medical portfolio portfolio and growing relationship with health system partners. Welltower usually leases its healthcare facilities under triple net leases, where tenants are responsible for paying property taxes, insurance, and maintenance costs in addition to rent. The company also builds relationships with experienced healthcare operators that lease and manage these facilities on a long term basis. These activities insulate the company from short term market swings and drive steady top line growth. Welltower has resorted to capital recycling activities to finance investments and develop opportunities, paving the way for its long term growth. Notably, the company has been actively banking on its growth opportunities through acquisitions. Additionally, Welltower has a healthy balance sheet position and ample liquidity to meet near-term obligations and funds its development pipeline. Welltower's debt maturities are well laddered, thereby enhancing its financial flexibility. It also enjoys favorable investments, grade credit ratings from S&P Global Ratings, Moody Investors, allowing it to access the debt market at favorable terms. However, Welltower operates in a competitive healthcare real estate market and maintains sizable but manageable debt load, yet those factors are balanced by robust demand drivers that support its growth outlook. The case for medical properties. Medical properties, also known as MPT. See, I changed it. Okay. It's a healthcare REIT. that is engaged in the acquisition and let me start that over. Let me run that back. The case for medical properties. Medical properties, also known as MPT, is a healthcare REIT that is engaged in the acquisition and development of net leased healthcare facilities. Its portfolio consists of 388 properties and approximately 39,000 leased beds, licensed beds. But excuse me, God. Its portfolio consists of 388 properties and approximately 39,000 licensed beds leased to or mortgaged by 51 hospital operating companies in the key markets of the United States and other countries. The company leases facilities to healthcare operating companies. These facilities generally have initial fixed lease terms of at least 15 years, with the most including 5-year renewal options. More than 99% of its leases provide annual rent escalations based on increase in the consumer price index. MPT follows a disciplined capital recycling strategy through which it disposes of non-core assets and redeploys the proceeds in premium asset acquisitions and accretive development projects. Such efforts also help the company improve its financial position and address the concerns surrounding the tenant base. Medical Properties has been making efforts to enhance its liquidity position and financial strength. It also accesses to diverse capital sources through capital recycling and internal cash flow, provides ample financial flexibility and is likely to support its growth endeavors. However, Medical Properties face the company face operator concentration risk. Any changes in lease arrangements or tenant performance could affect its result, though the company continues to manage these relationships actively. While its debt level remains significant, disciplined financial management supports ongoing operations. That's good money. How do your estimates compare for Welltower and Medical Properties? The exact consensus estimate for Welltower's 2025 sales and funds from operations FFO per share implies year-over-year growth of 29.8% and 21.5%, respectively. The estimates for both 2025 and 2026 FFO per share have been revised northward over the past 30 years. Does that consist of estimate for Medical Properties 2025 sales and FFO per share indicates a year-over-year decline of 5.1% and 31.3%, respectively. FFO per share estimates for 2025 and 2026 have been trending downward over the past 30 days. Performance and evaluation of Well and MPW. Mm-hmm. In the past 3 months, Welltower shares have gained 6.5%, while Medical Property stocks has gained 2%. In comparison, the Zacks REIT and Equity Trust over the industry has decreased 1.5 in the same time frame. Well is trading at a forward 12-month price to FFO, which is a commonly used multiple for valuing REITs, of 30.97x, which is above its 3-year median. Meanwhile, MPW is presently trading at a forward 12-month price to FFO of 7.71x, which is above its 3-year median. Conclusion: Well has the edge. Oh, hmm, hmm. Welltower Medical Properties both stand to benefit from the strong demand in the healthcare sector, but they offer distinct investment profiles. Welltower provides diversified exposure to show and own facilities focused on growth, while Medical Properties specialize in net lease hospital facilities. Both follow disciplined capital recycling strategies, But Welltower holds an edge due to its favorable demographic tailwinds, investment grade credit ratings, and healthy balance sheet. For seeking, excuse me, for investors seeking strong long-term upside rather than purely dependable income, Welltower stand out as a more compelling healthcare REIT to consider right now. Sales and earnings growth for 2025 also suggests that Well stand out as a better REIT pick currently. While Well carries ranked 2 by MPW has number 3 ranked hold. You can see the complete list. Mm. Mm. Good read.